Hello, 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 and welcome to the Security Token Show. It's our first episode of 2024. We're your hosts. I'm Herwig Konings, joined as always by my business partner and my friend and co-host, Kyle Sonlin. How are you, buddy? How was your new year?
Hey, everybody. We're kicking and screaming here into 2024. Herwig, we've been watching this space now for many years, but 2024, we've got the institutional adoption from last year. We've got the crypto bull market tingling, ready to come back. I'm feeling pretty good going into January.
Was on the research, a lot of articles about is 2024 the year of the security token. Let's dive into the show and find out, shall we? Starting off, Kyle, with a bit of a review of 2023, shall we?
Let's do it. Where do we even start? I don't know. It's just there were so many great things that happened this year, huh?
Yeah, and also in many ways, sometimes a year you may want to quickly forget. A lot of big news, and we'll talk about that on the market front, obviously across many markets, but also the security token market, if you will. But a lot of great big news that came out as well. Project Guardian, I think, obviously made a lot of huge rippling waves, specifically showing off the true value of being able to rebalance your portfolio quickly, efficiently, being able to reduce all those operational steps. And it's all legit because JP Morgan, Wisdom Tree, Apollo, Providence, Avalanche, many Oasis, many major players involved to make it so. So I thought that was really cool. We saw Archax and Aberdeen in the UK really also starting to make big waves. Calistone as well. I'm loving what I'm seeing, Kyle. What about you?
Yeah, no, what you talked about Project Guardian, I think is really important because for anybody that doesn't remember, the Monetary Authority of Singapore launched a regulatory sandbox years ago. We covered this on the show from probably 2019, 2020, where they were creating this environment for companies, financial service providers, banks, issuers to actually create their own blockchain solutions under this umbrella. We're now seeing this come to full fruition with Project Guardian, where now huge investment banks are launching test products through it. And they're not only just in Asia at this point, they've expanded around the world to work with cross-country interjurisdictional transactions. So this is really, I think, a cool development over the course of many, many years, which, as anybody from this industry will tell you, is not surprising when it comes to capital markets. And so, they're obviously I think the biggest surprise of the year, Herwig, was INX coming out and announcing that they had gotten into this strategic transaction with Republic. They had an injection of capital through a fundraise into INX that gave Republic the option to ultimately acquire 100% of INX and their ATS, presumably to launch new products from the Republic platform onto the secondary market liquidity. This was something that we didn't see coming, but was very exciting as Republic's pretty active in the space. And one of the first notable acquisitions we've seen of some of these larger companies since actually INX acquired their ATS from Open Finance a few years ago.
Yeah, no, I think that we'll have to see how that one ultimately develops through on the 2024. And their Republic note listing is clearly a sign of many things to come between that partnership. Also, Securency getting acquired by the DTCC was also, I think, another notable acquisition of 2023. Yet another institutional example of, hey, the biggest clearing and settlement agency in the world is looking at this technology and saying, hey, we got to get ready for this. Love your point about, what's happening over, of course, Singapore continuing to position itself as what I almost see as like the new bridge between all these other markets. They really, as you pointed out, are getting a lot of foreign from Switzerland, from Japan, from Europe, even probably likely with the United States. We see a lot of partnerships happening to make Singapore that kind of hub. But hey, South Korea on the scene, their biggest banks coming together, forming a consortium around security token offerings. That's very similar to the path that Japan followed. And now they are live with the the ODX, the Osaka Digital Exchange, as of Christmas, just right at the end of the year, and that was a big undertaking by a lot of the biggest banks in Japan, as well as much other activity that happened there. We also saw a big acquisition from Securitize, Kyle, on OnRamp Invest to get them access to the RIA market. Many are talking about the RIA channel as that new access to capital, and I think that's very important from a primary. And secondary is a little bit more interesting. That we haven't seen that as much common. But hey, that's the whole point of this is distribution, right? So we're seeing this need and demand for that, and I think that's why that acquisition makes a lot of sense, Kyle.
Totally. And moving on to the multi billions of dollars of issuances we saw this year that continues this thing thriving. This industry continues to grow. We certainly saw at least billions, if not tens of billions of institutional debt that has been tokenized. It feels like every week we cover new banking initiatives, launching new blockchain instruments. And not only that, but we saw Figure tokenizing billions more in HELOCs, home equity lines of credit. So more debt, but this is from certainly still an institutional lender, but much more of a startup style of institutional lender, at least that's grown to that size today. They are a non-bank lender as well. And we had Red Swan, which tokenized a $4 billion foreign asset property in the MENA region. And they're doing great things in tokenizing real estate, as well as bringing their crowd fund to market. So a lot of tokenizations have been happening. Unfortunately, that same activity didn't translate into the secondary markets as our volumes were down this year. It was not incredibly large. I'd say probably down 15% or so from what we saw in 2022, which all things considered isn't too bad considering the market definitely across the board, whether it was public markets, whether it was digital assets or security tokens, I certainly saw depressed interest in the general decline in the markets over 2023.
Yeah, can't all just always be going up, up, and up. And I don't think anyone is looking at the entire crypto market and even some of the just general sentiment around yields and everything that's happening in rates around the world that, 2023 wasn't a great year, but there was clearly a lot that was put in the making. And if you liked what you hear, we've got a full breakdown coming to you for the full year in review of 2023. Hopefully that's very useful. We'll dig into this a little bit more, Kyle, but we can't take up the whole show talking about last year. So we'll save that for later. But Kyle, before we go, I think we didn't talk about what I think might have been the biggest news of all. You know what I'm talking about?
I think I do. We certainly worked really hard on it. That is the book, Herwig. We spent 18 months writing that. We put it together. Shout out to Peter Gaffney, Herwig, you and me, as well as Mark Powers, who wrote the foreword, the former SEC attorney. Shout out to the Blockchain Explained. Oh, you can't see it through there. Shout out to the book, as well as the Tokenize This conference, Herwig, that we brought out to the market and saw so much industry adoption, so much excitement for the tokenized world. I think those were two huge achievements.
I'm absolutely proud of both. We had thousands of people tune in for Tokenize This, hundreds at this point, if not, over 1,000 copies sold of Blockchain Explained. I don't know the exact figures, but very excited about also the feedback we're getting. Just people like what we're doing. So guess what, folks? Whether you like it or not, we're going to keep doing it. And so with that, why don't we kick off this show with an interview? Let's get into it.
Well, welcome to another interview here on the Security Token Show. This week we have Dan French from OwnProp joining us this morning. Dan, how are you today?
Doing great. Jason, thanks for having me on. I appreciate it. Big fan of the show.
Oh, absolutely. Well, thanks for coming on. We're diving into a topic here that came across our desk here, is that you guys are launching a real estate fund investment opportunity. Great. It's great to see new offerings come on all the time, especially as we kick off 2024. But before we dive into the opportunity, let's talk about OwnProp. How'd you guys get started into tokenized real estate?
Yeah, no, thanks, Jason. We, the background that we had in real estate was from the private equity and investment side. And so since 2011, we've done a couple $1 billion in assets, total value. So that'd be like 17,000 apartments, mostly focused on Florida and Texas. Really strong track record, but by 2019, we just felt like it was very frothy environment on the buy side. So we shut that down, and we focused much more of our effort on launching technology companies focused on real estate. And one of those tech companies, we actually launched 10 of them, but one of them is OwnProp. So that really started in 2021. We did a lot of exploration. Obviously, there's a ton of legal work that goes behind it, a lot of technical build out. These things just take a long time. And we've launched numerous offerings on OwnProp since that time. And so it's got a very big vision, but to date, it's raised about $1 million total, and that's okay. We know there's some other groups that are a little bit ahead, but we have a long range vision, and we truly believe in the mission of what OwnProp is doing, which is to democratize the ability to invest in high quality real estate assets.
Got it. Yeah. So it sounds like you guys are kind of kicking off the year here with an offering. Tell us a little bit more of kind of like how the process works. Like if someone wanted to invest into this offering, what does the platform bring to the investor that maybe makes OwnProp a little different than maybe the other real estate tokenization platforms?
Yeah, we wanted to feel like a retail type experience. Like you can get on to the OwnProp app, or you can go to ownprop.com in the web version. But you can get it right on there and get approved as an accredited investor. Right now, we only offer to accredited folks, which is unfortunate. But once the SEC gets out of our way, hopefully we'll open it way up. But basically, you can get on there and look at the offering. You can, in a very clean user interface, and look at what you're investing in. And right now, we have the opportunity to invest in a real estate fund that we actually are the sponsors of. We being a separate entity, but a related, company. It's called ATX Acquisitions. And so we feel very strongly that the sponsor, which is, again, an affiliate company, is very high quality. And the assets that are going to be in the fund are going to be extremely high quality. So you can get on the platform at OwnProp and get a $10,000 token, which is a really great, much more democratized way to invest in the fund. Whereas if you went straight to ATX Acquisitions, the minimum will be $1 million. So this minimum is $10,000. So it's 100x more, accessible to folks who want high quality real estate. And that's essentially what OwnProp's about. And long term, we want to be able to, expand the offerings. Again, push this out to folks that are not just accredited, but anyone that wants, high quality real estate assets.
Yeah. So tell us a little bit more about the fund. What kind of real estate properties are we looking at here? It says 10 to 15 of them. What would they consist of?
Well, the fund will be, 20 to $50 million of total, in the fund, and then it'll be diversified across a portfolio of assets. Now, it's asset class agnostic, so we're really betting on the fact that in the U.S. Interest rates have spiked so fast. Historically, they're at 20-year highs, but it happened so fast, and now that's changed the whole buying environment. So we feel that there's much better buying opportunities where a lot of ownership groups are in trouble that bought in 2021, 22. At that high mark. So they paid a lot of money, and then they put floating rate debt on their deals. So we're open to any kind of deal, hospitality, multifamily, basically anything except for traditional office. We're not going to do that. But our background is mostly in multifamily, apartments, and especially targeting Florida and Texas. So those are the growth markets. We love them. We're going to keep betting on them.
Yeah, no, that makes sense. We've seen, in Florida specifically, we're based out of Miami. We've seen the great migration, I guess, of New York City down to Miami. So and other cities, by the way, in Florida in general. So, and I'm sure Texas is similar. So interesting that you guys are focusing on those areas. Appreciate you coming on and telling us about, kind of like this fund opportunity here that you guys are tokenizing it based on, what we saw on the on the app, I mean, it looks like, people can really just truly understand, hey, here are my different allocations. Well, here's my portfolio makeup. So, it's nice to see that, it's something mobile friendly, which I personally believe is great for the individual investor experience rather than the institutional, obviously. Considering that individuals are kind of transitioning, into, younger generations getting more money now with transitional wealth. And maybe they want to have a little bit more phone/e-commerce experience or just hands-on experience with their investments. So cool to see this for tokenized real estate.
Yeah, and I appreciate that. And yes, we took a lot of consideration into making it a very streamlined, very clean user experience. So that way people, they should be able to hop on something like this and just like in Robinhood, like quickly say, all right, boom, what's the background of what I'm investing in? What is the quality of the group that's sponsoring the deal? And then look through all of it and say, yeah, I want to invest. And then later on, we'll drive down the minimum investment down to $1,000 or $100, and that's the ultimate vision of it. But that's going to take some time. But we're super passionate about the mission of empowering people to invest in real estate.
Great stuff. Well, welcome to the Security Token Show and the industry, and we're definitely going to be keeping tabs and seeing how the fund performs, how you guys are doing, and maybe new opportunities that even arise on your platform. But how can people get in touch with you if they want to work with OwnProp, maybe launch something on your platform, etc.?
No doubt. And Jason, I'm going to check you out when I'm in Miami and get some of that good coffee that's down there.
100%.
The gasoline. Yeah, look, ownprop.com is a good way, but for me personally, dfrench@ownprop.com. That's great. My personal phone number is 845-629-1808. I'm available. Would love to connect with people.
Fantastic. Well, you guys heard it here on the Security Token Show. We'll send it back for our next segment. Thanks, Dan. Thanks for joining us.
Thanks so much.
And kicking it into the Token Debrief, Herwig, we do have some news that happened over the holiday season. The market never closes. So the first one is actually really fun. Moody's, which is a well-known rating agency for securities, actually rated a new tokenized fund. We first covered ratings coverage from years ago when Fat Brands launched a tokenized debt offering that was rated, and then Figure had some issuances that were rated, and we saw other banks. But now we have a fund product that has been rated. Specifically, Standard Chartered has their venture fund, and they have been incubating an issuance platform called Libera. It's based in Singapore, and it's a tokenization startup that worked with FundBridge Capital, also in Singapore. And FundBridge has the SGD Delta Fund that has been tokenized. And so the rating here was AA, which sounds good. Unfortunately, this is the first tokenized issuance rating that I can remember that was actually rated slightly lower than what the underlying asset was, which was AAA. So it is 1 degree lower than the traditional underlying asset. And there were a few reasons for this. The first one was actually more about the issuer itself rather than the particular blockchain or tokenization. And that was around FundBridge Capital's lack of experience with this specific type of fund product. And they noted that to be a risk. And the issuer being small in size means that potentially there are some risk factors with respect to maintenance of this security. But it also did cite technological and potentially governance risks in using a public blockchain, which is very interesting because as we've seen with the Fat Brands debt instrument, for example, which was on Ethereum, that was actually cited as being a transparent method of communicating that security and locating the asset itself, versus now potentially, we're not sure if that's a change of tune or if the weighting of maybe the issuer itself had a higher priority in terms of the rating changes. But either way, a new tokenized debt instrument or fund instrument, was rated by Moody's, so more institutional adoption of the industry.
And a rating, no less, is an important factor to getting increased demand and interest from investors. It's a legit thing. These products are getting rated. I think the issuer thing makes sense. I understand maybe the platform risks too. The blockchain one is interesting. Morningstar was, I believe, the firm behind the Fat Brands rating.
Sure,
Maybe
I
they
actually
had
think you're right.
opinions. Perhaps also maybe that was a somewhat permissioned Ethereum environment. I actually don't recall, but that is definitely a great note, Kyle, about how they highlight potential risks in a public blockchain. It's also maybe why we've seen a lot of the bigger institutional banks working in the space stay away from, as we know, from public blockchains, despite the sentiment always tending to be that's where we'll all end up one day. But that's great news again to see all of this just really professional activity in the space, because that's what this is all about, which is why I think this next update is also worth talking about. The biggest derivatives body, I think that matters. As Peter pointed out in our weekly email, he always thinks about that scene in The Big Short that brings up the International Swaps and Derivatives Association, which provides a lot of governance and provides a lot of important rules for the entire derivatives and swaps industry. And they basically pointed out that they are now ready for this new digital landscape. They basically will have designate digital assets used in transactions as DLT cash or as DLT securities. And it also places an emphasis on the local business day and the time, given the global and 24/7 nature of the industry's capabilities that they employ. They did also provide some basically reading on the notes here, just more value for the industry, right? To be able to adopt this technology, make sure, right? It's what we've talked about in the past, right? How important it is for these financial, I don't know exactly how to describe this association, but their importance, but exactly how they help set these rules. They help create the adoptions for the derivatives markets to be able to say, all right, now I can go ahead and work with whatever partner they might have already been talking to potentially do this stuff. So I think this is a sign that we're going to start to see derivatives markets enter tokenization, Kyle.
Yeah, no, it makes sense to me. It's just another asset that's needed in the industry in order to have a healthy financial market. So great to see that those products are coming. And on to the next piece of news, Herwig. We've got InvoiceMate and TradeFinex. They have a partnership as they are launching actually transactional systems, TradeFi, which is specifically like shipping and all kinds of invoicing. And they're taking that and tokenizing it, which allows them to have digital representations of all this stuff. It also allows them to fractionalize these invoices themselves, potentially for collateralization or hedging purposes. These contracts are also settled using stablecoins on the XDC blockchain. So that's a way to potentially streamline the payment process itself. Potentially, you could even set up smart contract style of escrow to make sure that the money is there and that you're sure that the counterparty is actually serious about paying, which can be a risk in these types of transactions. So I think that this is a system we've seen before with companies like Centrifuge and their Tin Lake protocol. It's great to see other companies like InvoiceMate and TradeFinex getting involved as well.
Yeah, just the industry continuing to grow. I think that's a great, just another great asset class, Kyle. Trade finance is huge. The smart contract structures you just mentioned are actually game changers, I think, for people. And it, again, brings the classic use cases of access and increased liquidity to this. So I think it's a great use case. And last but not least, to end off the token debrief, we are going to head over to Asia, where in Hong Kong, prominent digital asset exchange HKBitX, they entered in a strategic collaboration with the Shanghai Technology Exchange, which is actually created by and supported by China's Ministry of Science and Technology. And it's the Shanghai municipal government that's doing this. They're doing this to highlight their partnership, actually, which means this is a great way of saying that, don't sleep on China. They've been I know the Bank of China and the Construction Bank, they have done some tokenized bonds and they've been playing around with this. This is a potential bridging, of course, using Hong Kong as their ecosystem for potentially some Chinese enterprises to make it onto these tokenized Hong Kong markets, maybe, Kyle. I don't know. It's not clear exactly what's going to come out of this other than the groups are exploring, how to bring tokenized enterprises to the market. Who knows who will be able to access it or how it can be traded, but it is worth noting.
I'd expect to see a lot more of these types of announcements, not only from the APAC region, but from many of the very innovative countries and jurisdictions participating in the industry. Great to see collaboration.
Yeah, a lot of great stuff happening around the world, which is why we'll keep you updated every week on this show. But that's all we've got for you this week, Kyle. I think it's time to get to a pretty big announcement now.
It's the illustrious company of the year. Herwig, we've been hyping it up all year, as we have for 4 years running now. So I think we can turn the title of the show and get into our final segment. Company of the year, Herwig.
Another year has gone by.
The most illustrious award in the history of security tokens, dare I say.
Kyle, there were a lot of good runners-up that made the cut. I think Project Guardian on an institutional level, which did not win, was a big deal. It set the path forward for a lot of other institutions, for a lot of other markets and regulators to pay attention to this technology and just how transformative it's going to be. But at the end of the day, it was just a trial. It was an amazing trial, but just a trial between a lot of great participants. It wasn't some of the other great companies like Archax, which also I think there was a shout out, Kyle, in the space doing a lot of big things moving forward with the UK, with Aberdeen, with it's on the custody side of things that they're doing with their own version of their ATS license, the MTF license that they have. Everything that they're doing is trailblazing. But Kyle, they are not our companies of the year. I'll let you do the honors. Who did we select to make the biggest move in this space, the biggest impact leading to adoption of this technology, setting the example of how it's done and getting investors active? Who's our company of the year for 2023 on the Security Token Show?
So, Herwig, the holy grail of the security token industry is liquidity. How are we going to bring in new investors into this industry to drive primary fundraisers for issuers and secondary transactions on the market for not only the companies that we can bring into the tokenization space, but how do we bring in new high quality issuers? And so our company of the year, we've decided, is somebody that does all of those things. They have a huge retail investor network and a proven track record of activating those investors. They have a tremendous deal flow and issuer database. And now, through the announcement of their acquisition of INX, which is still to be confirmed as of February, but they announced it as well as made some great investments into the company already, Republic is our company of the year. They not only did all of these great things, they fundraised their own security token through the Republic note and raised $30 million for it. They have a wallet with full integration of these different blockchain technologies. They're working with Avalanche, which is a trusted security token blockchain. They seem to be doing everything the right way, and they are going to be driving hundreds of thousands, if not millions of potential eyeballs, customers, clients, and everything into the industry. And for that reason, Herwig, they have our company of the year.
Well said, Kyle. Well said. Republic, congratulations. Your Security Token Show's Company of the Year 2023, which is kind of cool because if you do go through with the acquisition of INX is a previous Company of the Year winner on the show. So a pretty cool merger of companies of the year. But absolutely, I'm so excited that, they're putting all the right pieces together, right? The wallet technology to help create critical infrastructure to get investors holding tokens. They have the deal flow coming in. And by the way, Republic is the leader when it comes to raising capital through Reg CF offerings. And they continue to grow their ecosystem into different asset classes, as well as acquiring many other companies to just make themselves bigger. So to know that they also have plans to have that secondary market relationship with INX, to know that there's going to be deals like that, and to put their money where their mouth is by listing their very own Republic note on INX like that, I think that is just absolutely award-winning. And not to mention that the Republic note is a pretty cool structure. We have a great, interview with them actually on this from the Security Token Show in the past, where essentially you get access to this portfolio of hundreds of different offerings that went through Republic. A great diversified method, continues to pay out essentially every, I believe, 2 million in gains out to investors. So a very cool structure that leverages tokenization to the max efficiency there. It's just how it's supposed to be done. They got a great team. We've had a lot of pleasure of working with them, just like we do with many players in this space. As we've said, there are so many great companies in this space that are making things happen. It's going to be a heck of a year. But Republic, you made it happen last year. I'm excited to see what you're going to do this year.
Huge congratulations to the team. Over 2.6 billion in funds raised for clients on their platform. That is a mark we do not even come close to in the current market players, as much as we love them. So great to see Republic bringing a rising tide that will lift all ships in this industry and hopefully inject some much needed liquidity into the ecosystem.
We're going to try to get them on the show next week, so we'll get to hear them fully out on what their plans are. But with that, Kyle, I think let's end our show, starting off what we call season 7 on our end, as we are over 4 years running into this. Very exciting stuff. Come check us out on stm.co, where we got all the latest news, reports, research, all the latest data available. Also on stomarket.com, where we're going to hopefully see a pretty big update for you folks soon on that. And of course, hit Kyle and I up on social media. We're on LinkedIn. We're on Twitter. We're on a lot of spaces. We'd love to talk to you about tokenization or any feedback you'd like to see on the show. We're always open to it. Kyle, any closing thoughts from you, buddy?
If you want to learn anything about the tokenization of finance, check out our book on Amazon. Follow us on social media and show us some love. Leave your comments below, and we will cover and talk to you next week on Mondays.
Absolutely. And with that, happy tokenizing.